welcome. Thank you for coming out on this beautiful day for a fireside chat on the future of employer-sponsored health insurance. I'm Doug Holtaken, President of the American Action Forum, and I am pleased to have the chance to moderate this panel with two superstars in this area. Nina Ocharenko-Schaefer has been an outstanding researcher in this area, and Casey Mulligan as well. Both have research appointments. Casey's at the University of Chicago. Nina is at the Heritage Foundation. Both have time in government and have served their country providing counsel to our policymakers. Nina was counselor to the Secretary of HHS, and Casey's been chief economist at the Council of Economic Advisors, thereby upgrading the position I so disgraced, and we thank him for his service. Our plan here is really quite simple. We're going to talk a little bit about the issues that surround employer-sponsored insurance, ESI, for 30 minutes, 40 minutes, and then we're going to open it up to answer all the easy questions that you might have. And so without further ado, let me just say that one of the reasons that AAF got into this year-long investigation of ESI is that it is something that really I think is quite poorly understood if recognized at all. In my experience, the left is interested in getting rid of the ESI. It's not government-provided single-payer health care, so it must by definition be flawed and dangerous and have to make it go away. On the right, it's sort of taken for granted or viewed as some accident of history, but not taken seriously as a market phenomenon where typically we would defend it in some way as the choice that private actors have made and thus reflective of their values. And so it occurred to us that it would be worth spending a little time figuring out what it is and then talking a little bit about what might make a better framework and environment for the future of ESI. And so we're going to try to have that conversation today and think about those issues. So to begin, let me just start with you, Casey. Casey has done a lot of research on the value cost of ESI and the value proposition it presents. And so if you could spend a couple minutes sort of summarizing that research, why did you do it? What did you find, and what are the implications?
Yeah, I really took two approaches. One is kind of listen to the people, listen to the people in the marketplace. And then the other is kind of look at the components of ESI and kind of build up a value that way. It turned out with similar answers. So on the first one, you know, what the people are saying, we've been studying, ESI has been around for quite a while. We've been studying what happens to take up of that product or plans when the price changes. And prices have gone up, they've gone down a little bit, gone up, and people stick with it. And that's telling us that, boy, they were getting a lot out of it, especially at that lower price. They're getting so much out of it that they don't give it up when the price gets higher. And so that's indicative of a lot of value. There'd be other products where you have good alternatives and you raise the price and people are gone and they switch to something else. But we don't see that with ASI. The people are telling us by their purchasing behavior that the next best alternative isn't very good in their eyes. Then the other kind of ground up approach is I try to look at the different types of things that ESI is doing. And let's say as distinct from individual health insurance. And one of the things, they all kind of fit in the categories, you're not alone. When you're buying ESI, you're with a group of people. And we do a lot of things in groups, right? We're families, workplaces. I find it a little odd that we expect that people would buy insurance all by themselves. And in the marketplace, they reveal they don't want to buy it by themselves. They do it in a group. What happens in a group? Well, expertise. I mean, healthcare is complicated. That's partly good news. We've had a lot of innovation and new products coming on, and we shouldn't expect every individual to keep track of that. They designate somebody that they trust or align with somebody that they trust who's evaluating those alternatives kind of on their behalf. And an employer is a good candidate for that. Especially, you don't have to worry a whole lot about the financing when you have an employer, because by construction, when you're with the employer, there's money flowing there and you can just take it out of your check. The other part is unfortunately, parts of healthcare don't have a lot of competition. Some local markets, not a lot of hospitals, especially newer drugs, only one patent holder. And so it very much helps to be in a group to negotiate a better price from those with market power, of which there's a lot in healthcare. So the employers are able to get better deals than individuals can get on their own. And they essentially tell, or they may have a consultant or a PBM or another company that is helping them, maybe together with other employers, but as a group they say, look, if we don't get a good deal from you, you're not going to be in our preferred network, or your drug is not going to go on our formulary, or it's going to go in a high copay tier or something like that. And the suppliers, they're a little frustrated by that. They try to come to Washington and have it stop. But until that happens, they have to compete, and then they offer better deals. So there's a lot of savings coming from that. And this is all just from a personal point of view. Now there's also the wider implications of healthcare. We know if people don't have insurance, they may end up on a heavily subsidized plan where the whole country has to help pay for them. And we know that Medicaid, Obamacare are very, very heavily subsidized, much more heavily subsidized than employer insurance. So every time employer can get people signed up and get them a reasonable premium, keep people off of public assistance in essence, that's saving the taxpayer a lot of money. So these are some of the sources of value that come out at over $1 trillion a year. Something on the order of $10,000 per person on employer insurance, including the children of the employees, of extra value there. So it's not a surprise that when in Washington they start to come after ESI, they get a lot of resistance because it's a lot of value. Something would be destroyed that's significant, and people aren't just going to stand there and take it. They're going to fight back a little bit. So.
Yeah, I want to personally testify to the resistance thing. I am infamous in some circles for a 2007 proposal by the John McCain presidential campaign to essentially unwind the employer-sponsored insurance system with a direct tax credit to individuals. The Obama campaign ran an ad which showed a ball of twine unraveling, and the phrase, "John McCain will tax your health insurance for the first time." It remains to this day, according to Glenn Kessler at the Washington Post, the single most run political ad ever. And so I have generated over a decade of vile attacks with our approach. So yeah, it's popular, and touching it is really unpopular. It's a lesson I learned. Nevertheless, Nina, this is your cue. It used to be like 70% of people got their insurance from employers. It's now under 60%, high 50s. Why, given its value and its popularity, are we seeing less in the way of ESI?
Well, first, if I can defend your position from the 2000s.
You would be the only person, so go.
Well, let me put a little context in that, because I think it's really important to understand how the landscape has really changed since then. First of all, a lot of the debate in the policy community at the time was really about how do you fix some of the deficiencies that are underlying the ESI system. So while there are a lot of positive things, there are also some downsides. It's unlike other employer-based coverage. There's an unlimited, it's unlimited, meaning there's no cap on how much goes to it, so that drives up the cost of premiums and healthcare utilization, et cetera. It really benefits those that have higher tax liabilities, those up the income scale rather than lower income people. And it did still have some issues of people that kind of get left out. So if you're a part-time worker, your employer doesn't offer coverage. You're a contract worker, you're not offered. So a lot of the debate at the time was not about destroying ESI, even though it was proposed that, it was portrayed that way. Yep. It was really, how do you fix those deficiencies in the system? And I think that's where today, the landscape, because of the passage of the Affordable Care Act, has totally changed that. And I would say in a negative way. The idea that you're going to have a marketplace doesn't exist anymore. There is no alternative to employer-based coverage in the truest sense of a market or having any competition. Not only is it heavily subsidized through Obamacare, but it's heavily regulated. So even plans that aren't subsidized are regulated by Washington at this point. So a lot has changed in that. So I just want to, I wanted to defend at least part of the reasoning why that was going on at the time. And now why the landscape has changed so much. I do think that the employer system is really perhaps maybe the platform and maybe ripe for modernization, I would say, rather than elimination. And I know I digressed from your original question, but I just wanted to make sure that that context was put in place on that front.
I took notes. I greatly appreciate it. Now answer the damn question.
Yeah. I do think that some of the complications, in particular with small businesses, we know that very large businesses continue to offer health insurance to employees. It's kind of an expected thing. But small businesses struggle, and they have other demands on their time, other demands on their resources. So I think, again, it's those subsets that find it difficult who may then, because of options like the Affordable Care Act or others, say, well, we'll just kind of go out of business. Although then you see it is fluctuating. Like, it's not that it's kind of collapsed as quickly as others have thought it would, but it kind of ebbs and flows. And I think we're kind of at a new kind of leveling of the offerings of employer coverage. I would point out, too, that part of the reasons for that are policies that were in place. So the firewalls that were included in the Affordable Care Act that limited those that would be able to access subsidies have created, and even the definition today, we talk about there's the new ruling in the Biden administration on allowing now dependents to get subsidies. A lot of those were put in place in order to prevent kind of the erosion of employer-based coverage. And I do think that they were, at the time, I mean, minus this new regulation, which will probably turn some things upside down, have created a deterrent and at least to make a pause for people to say, we're just going to flood out of the employer market.
Yeah, so at the time the ACA passed, we did some calculations that suggested that from a purely financial point of view, anyone up to about 300% of the federal poverty level, they could make a deal with their employer to go to the exchanges. They could get just as much subsidy as they had before. The employer could make more money, and everyone would be better off. There was so much taxpayer money on the table, but it never happened. So I think it's a real tribute to the value proposition that's there, but that people didn't have that happen. I want to raise sort of two issues of this, and either of you can chime in as appropriate. One is specifically surrounding the increased subsidies to the ACA exchanges, the premium tax credits that came with the American Rescue Plan and now have been extended until 2025 in the infamous Inflation Reduction Act. How should we think about that from the point of view of ESI? Because in the work that some people in this room did for AAF, what we found is that didn't produce a lot of newly insured individuals, but it did rearrange the deck chairs a lot. Like, people were out of ESI and into the ACA. So from a policy perspective, how should you think about that very expensive expansion?
I think I look back to what the kind of calculations that you guys made around ACA, switch out of ESI. ESI is a valuable product that kept people, but also I think Obamacare, and that's the right word to use at this sentence, Obamacare is an unbelievably bad brand, unbelievably bad brand. And to the extent that it can recover from that a little bit, we'll start to see people switching, people getting experience with it. So I think part of the intention, not only just the regulation that came down this week, but also with the IRA and other plans that have been put in place, is to move more people onto ACA and off of employer. Employer is more out of the reach of the regulators, as you mentioned. And if you're a regulator, you might not like that.
So for this group, who regulates the employer market? Who regulates the ACA?
I mean, the ACA, HHS is doing a lot of the regulation on that, and then there's a whole state filter as well with, depending on the state you live in, and then they're approving which plans would be there.
I would just add, too, that I think it goes back to the value proposition, too, that we'll have to see what plays out, but I do think that it's the plan, the familiarity of having an employer-based plan versus Obamacare, which like you said, it has such horrible brand ID, who wants to say, okay, I'll leave my employer plan. It might not be the best, but I don't want that. And like you said, having someone that is a trusted resource for you, again, might not solve all your problems, but at least you have someone in your building you take your bills to and says, I don't understand why I'm being charged X, Y, and Z. The American people, I think, will also realize, do you really want to go to HHS or call into a 1-800 number from the government to help resolve what your bills are with the healthcare system? So I think as people are faced more and more with those kind of trade-offs, the more I think they will continue to be inclined, even with that maybe financial benefit, to still want to gravitate and encourage the employers to continue to offer their insurance.
So I want to just get you on record on two things that I think are really important about your research, right? So is it correct to say that if we just drag a person from the ESI to the ACA exchanges, that the total surplus has gone down?
Right, yeah, the taxpayers have to kick in more. And on the patient side, if you will, they're leaving a product they like better. It costed more than they were paying for it, but they're losing that value.
Yeah. And I think people don't often think about that kind of misallocation of insurance dollars in the way that we do in other public finance questions, right? We sort of ask that all the time, are we distorting the market in a way where total value to the society has gone down? That's exactly what's happening here, and it's often not talked about that. The second one that's similar is, and your research really makes it, I think, an important point about this, is it's often the ESI system is just characterized as a big tax shelter, right? We do not tax compensation in the form of health insurance by employers, and so we should get rid of that. That's all it is. And your research says?
Well, that's correct description of the tax rules. However,
thank you.
Employer health insurance, that tax favor, if you want to call it that, you can only get it through work. It's one of the few things that government gives us that you only get through work. There's so many other things that you get through not work. And Obamacare would be full of that, and food stamps, unemployment, go on and on and on. This is one of the things that you get through work, and it encourages work. And every time somebody works, that's a ton of money for the tax authorities. So you have to count that as well. And we've seen a lot with different states that they've moved their Medicaid eligibility around. They see that this really does affect work, the health insurance situation. It's given a prerogative label of job lock, like, oh, it's bad that I'm locked into work because that's where I go to get things I need. I mean, that's how the economy's supposed to work, that you're supposed to, things that you like and things that you value, things that you need, you work for them. And this is a valuable thing. And not just from a tax perspective, but also these benefits of being in that group. I mean, that's a group that you're going to say goodbye to if you're not working. And all the things that comes with being in that group. And it's not the same, it's not like you can have other groups formed outside of work. What's nice about work is it's formed for making a widget or doing whatever your company does. It's not formed for health reasons. And that helps a lot, not just in terms of having a wide pool of people to insure, which gets talked about a lot and is true, but also in terms of having a wide pool of people to be pressing on those drug companies, pressing on those hospitals, and say there's this whole range of customers you can say goodbye to if my employees don't get a good deal. So that's attached to work, and work, maybe people don't realize, most of the GDP is generated by work. It's not business profits or something like that. It's mostly generated by work, and work is, you don't have work, you don't have an economy. Some countries will learn that the hard way. Scandinavian countries learned that the hard way in the 70s. Now, one proposal that people gave, and maybe you discussed this back in the 90s, I don't remember, well, we'll cut out the favor to tax employer health insurance, and we'll use the money to lower the tax rates. Okay, you got my attention there, because again, work is so important. That's usually not in the proposals. Usually the proposal is let's take that money and let's put it anywhere but work. In fact, let's put it into something that, again, rewards not working. So I think you have to keep work in the picture, really in any public policy, but especially in policies around employer benefits and regulation.
I would add too on the subsidy piece. So they're also not fixing any of the deficiencies that we have kind of, or at least I have identified in the employer system. So the unlimited, tax relief, there's no cost control on the premium subsidies within the exchanges either. So you're really just shifting it from the employer system where we say there's a deficiency there and just saying, oh, we're just going to allow premiums to continue to rise regardless. There's no controlling factor there. So they're not even solving a problem. They're just shifting more of the cost directly to the taxpayer by moving them on that side. And then the other part on the work too, I think, one of the things we saw during COVID was how quickly employers were able to adapt their plans, their offering. Telehealth, for example, was very quickly adopted in employer-based policies where, again, under the government system of under Obamacare, Medicare, Medicaid, I mean, my gosh, you had to declare a public health emergency, then they had to issue rules, and then they had to issue waivers, states had to apply for waivers. I mean, the process for getting just the simplest changes are just hung up when the bureaucracy is kind of in control. And I think that's another benefit of the employer system that has kind of bubbled up, is that they are quicker to adapt to do things, not only to help bring down cost and negotiating with PBMs directly, but also to adapt their plans in ways that are timely, and you're not waiting year after year for changes like we do in the government plans.
Yeah, I mean, that's so important. Innovation is very, very important in all of our economy, but especially in healthcare. The world's not going to be the same next year or the year after. That's the whole point of all the research that doctors and pharmacists are doing. And government is terrible at adapting. They're okay at kind of doing what we did yesterday, but adapting to what's coming in the future is terrible. Also, individuals wouldn't be so good at it. Because again, you think, an individual, am I going to be on top of all the papers coming out in the journals and the new drugs discovered? A group like employers is perfect for that. It's not a huge group like the whole country, so you have this massive bureaucracy that can't move or turn. But it's not so small as being the individual. So you have multiple of these groups, and there's competition. If an employer does a bad job of it, they're going to lose people and lose reputation and so on. So the employer system in an innovative world, which thankfully is our world, is got a lot going for it.
So what's the biggest threat today to the employer-sponsored system?
I would probably say kind of this very incremental effort of the government to supplant it. So it's not, we saw Medicare for All. It scared everyone off. They probably could have ran the same ad against Medicare for All they ran against
Certainly
that.
tried, yes.
So I think that Americans realize, and I think this is also why we don't see the change in ESI in popularity, that there's not a decline, because people kind of know what they know. That's a huge shift. People don't like an overhaul of their entire system. So I think those on the left, though, have done a good job in trying now to pull back and do more incremental efforts. So whether it's the public option, which maybe not happening here in Washington, but it is in the state level, where they're beginning to kind of encroach into what the private market is there, on creating kind of standard budgets across the states, where you say it's every payer is going to participate, and we're going to set a cap on how much you can pay, whether you're a hospital or insurer or provider. They're going to set that. So I think some of those, and then the most obvious things like continuing to expand the subsidies through the various bills that have been done. I think, it will be, and then finally, just even the regulations, like we said, with the family glitch rule that's come out. These are all very strategic and small, and my concern is that those policymakers, when the tides shift, will they have the hindsight to go back actually and fix the problems? Or will it be the inertia is so strong that we've yet lost another wave over the next 10 years?
No threats on the horizon?
I think Medicare for All has got more legs than maybe you said. That collectivist thinking is seductive. Doesn't make it right, but it's seductive. And yeah, I mean, you have insurance companies who are fighting back against it, but a lot of people find that compelling. And some countries did it. They backed off, but they still have elements of that. I mean, you have the British system. So why did they get where they are and we didn't? Until we answer that question, I take the Medicare for All pretty seriously as a political force. I think it's a bad idea, but as a political force, I'm serious about that.
So I would actually concur with that. In my experience, I give a fair number of talks to different business groups, and it always comes up. Single payer of some variety always comes up. And if you say the insurance companies are pushing back on it, that's proof it's a good idea, right? I mean, that's the way that gets interpreted. So I think we ought to think hard about, given that we have the ESI systems, we have some market-based approaches. What are the things that you can see that could be done from a policy perspective to sort of make the future look brighter for that? What are the things that are necessary to make it easier, for example, for smaller businesses? Like, this event is being thrown by a small business, right? We have 25-ish employees, and we go through exactly the process most people describe, which is every year we look at the offerings and how much it went up. There's money, or complicated. Sometimes we actually get help to come in and explain the different offerings, and it's a significant issue for a small business every year. And so what can we do to make ESI a more promising future?
So my ideas sometimes can be seen as radical, but one of the things I think we should be looking at is, I do agree that grouping is important, but are there other ways to group people that mimic what the employer sponsors plans do? And not for everyone, not to supplant them, but for those that fall between the cracks. Like I said, the contract workers, the part-time workers. There's a lot of energy behind, or there was efforts in the Trump administration on association health plans. That's great, but again, while it's still it is a work model and it's focused on where you are employed, I think that when we see a mobile workforce or changing workforce, how people patch together their hourly work might not fit into that kind of a model. So are there ways that we can rethink how how we can mimic ESI for others? I think it's a challenge, but I think we need to think through that. And then the other thing is, I think employees are going to demand more flexibility. Again, kind of fallout from COVID, people want greater flexibility. That includes probably flexibility in their benefits. And how can we allow and think kind of bigger scale on giving individuals some control over their compensation, their total compensation. So if you're 20 years old, your health care plan, if you're in some plans, it's very generous, but you're not getting much of the value because you're not using much of it. Are there ways, but you might need, well, until the Biden administration came in, but you might need additional resources to pay off a student loan. There are things, or maybe
you're dreamer.
Yeah, or maybe you're starting a family and daycare is important and you want to have additional resources. So I think those are kind of like on the horizon, long term. How can we rethink how employer compensation is done to help accommodate for kind of changing dynamics? I don't know if accounts are the right approach. People have talked about them, of kind of liberalizing health savings accounts, making them into something bigger where you can kind of tool and dial up and dial down during your lifetime. I'm not sure, but I think those are two. Can we find ways of mimicking employer systems outside of the employer system? And then are there ways to making employer policies more flexible for their employees?
I think we're going to see, again, I looked at technology. When I look to the future, it's not going to be static. And I think probably the leaders here is more on the drug side. A lot of technology in drugs. When you're getting your prescription, it's electronically filed. It's a whole electronic chain there. And you may not know it, but your insurer or people on their behalf are analyzing, are you sticking with your treatment? How's it going? What tends to work? They have these big groups. This isn't going on so much in the more hospital and physician's office sort of expenses, but I think they're trying to port those innovations over, and that'll be a big part. And what you see in the drug side is more aggregation. I mean, the small businesses don't deal with the drug companies directly. There's a whole kind of aggregation that goes on, And I think you'll probably see that in the hospital and physician practice as well.
So we have something like 5 minutes left, and I'm often in the other role in these panels and wishing the moderator would just ask the right question. So in the last 5 minutes, what question didn't I ask that you would like to answer? Go.
Well, I want to add on to what you said about innovation. I think one of the challenges that ESI might face in the future, and it's not just exclusive to ESI, but it's really to the whole healthcare system, but that ESI could be a leader on, is as we're getting to technologies that are treating individuals based on their personal DNA, and how do employers grapple with that, where it is an expensive drug for that person, but it will cure that. It won't help the rest of the masses in their plan, but for one. And I think employers could really do a great job in leading the way, working with their plans, especially if they're self-insured plans. How are we going to be innovators in that space? Because again, the government system is for the past. It's not looking forward. They don't distinguish you from me. We're all the same. And so maybe it's a challenge in the future. I don't think government is going to do a good job in addressing that. And I think that employers have a really great opportunity there to help kind of wrestle with that and maybe find some solutions that can be populated throughout.
Nothing?
I thought you did a good job asking the questions.
I love this guy. Okay, we're going to go to the audience. Ground rules are wait for the microphone. It's not that we need the microphone to hear you, but we are recording this and we need it to show up on the recording. So wait for the mic, identify yourself, ask your question in the form of a question with a question mark at the end, and the floor is open.
Hello, my name is Chris. Thank you so much for taking time to answer questions. So just full disclosure, I'm not the biggest fan of ESI. I feel very skeptical about it. It seems like it's not really a question with a question mark at the end. It's more so like a statement, and then I would love to hear your response to it.
You're stating at the direct violation of the... Go. Go.
But I would just love to hear your response to the idea that it seems like, well, first of all, there's a difference between ESI and the tax exclusion for ESI, and that there's like a story that wasn't really told with John McCain about how the tax code essentially, another way to interpret it is that it's a threat to a worker that if you're not getting your insurance coverage through your employer, if you're not giving up your control of your insurance or your healthcare to your employer, the government's threatening you with taxes otherwise. And I'm just wondering, is there a missed opportunity here that's like pro-worker? And also, is there a way to structure, and I think we maybe probably agree to a certain extent about, just the nature of like this tax benefit is not going away. Is there a way to structure it in a way that like gives the money directly to the workers through like an HSA, and like Trump's HRA rule was sort of a movement towards account-based care. So I'm just curious to hear your responses. Thank you.
Nina? Casey?
Well, I think the account base are a good option, and I think employers, just like they did with health savings accounts, I think the individual accounts will kind of test the waters on there. And I think that's one of the benefits of having employer system is that we can test some of these market-based models without kind of overly driving what the outcome will be. I mean, what you want in innovation is always try and fail. Some things are going to work, some things don't. An employer might then adapt and say, you know what, we weren't getting a big take-up on our HSAs. Guess what? We didn't offer any contribution towards the HSA. If maybe we offered a contribution, maybe more employees would select towards that. And then, you get bigger take-up rates. I think that's, again, I think that if we're looking for, neither system is perfect. We don't have a perfect system. But I think that the employer system itself is the best place to try to figure out and innovate into figuring out what is kind of optimal models for how to deliver healthcare in the country.
There's no question in my mind that the employer system has value beyond tax protection. And as I said, and let me give the example of live. People don't do things alone. I mean, you don't even live alone. Maybe some of you have apartments, you're like, wait, I got my own place, what are you talking about? No, you're in an apartment building with a bunch of other neighbors. You're sharing a lot of resources for living quarters in there. It's very rare. Maybe there's some widows who like live in a house, the detached house by themselves, and even then that's not the intention, right? The spouse died. We do things as groups, and I'm very confident that unless it were very big effort to actually destroy that approach, that people will continue to pursue it for its advantages. They don't want to be alone in most cases. They value how we can be better when we work together, and better can be cheaper, better can be more productive. And I think that value comes out clearly in the employer health insurance.
And
Go ahead.
well, I just wanted to add too that, again, if you go back to when people were talking about creating kind of individual plans, there was a market. The idea was if you got more people in the market would then respond and adapt, and we would get greater competition because the plans, the providers would now be accountable to the individual. Sadly, because of the change in the landscape, we're now really, because of Obamacare, that is the regulated market. There is no space for that kind of competition or innovation. What we have seen happen is a gravity towards the kind of least common denominator. So now what you see in the marketplace are more like Medicaid managed care plans that are now, Medicaid managed care plans that are now just being offered throughout the marketplace. There's not really a distinction. If you look at the plans that are offering them, they're consolidated into a few big insurance plans. They're not interested in really innovating. They're interested in, signing you up, collecting a premium, and then delivering the benefit. It's not a real market where innovation happens. And I think really the employer system as a group, even though we think individuals might spur greater competition, at least there might be some more innovation that can come.
So I just want to repeat what Casey said in a slightly different narrative, which is the narrative that is often taught to people like me when I was growing up. Employer-sponsored insurance is an accident of history. In World War II, we have wage and price controls. It is not possible to give people a raise, but we can give them health insurance. And they will get more compensation as a result. It's not going to be taxable, so that's fantastic. And out of this accident of history comes pooling around employers, and it's driven by the tax exclusion. This is just something that we're subsidizing by not taxing it, and it wouldn't happen otherwise. And we ought to go to something that is more organic. So then someone like John McCain gets someone like me and says, okay, what would be a dramatic proposal that targets that tax benefit differently, that is available to everybody, that's not tied to the employer, so it's portable, and you get a proposal that says we're going to have individual tax credits that are refundable, and you can take them and hopefully in a competitive marketplace do some shopping, and that no one's going to care because this thing is just an accident of history, and it's all based off the cash, and we're giving you the cash, so it's all going to be good. The people are going to get less cash are rich people, and that often happens in government programs. So it'll be fine. It was not fine because the employer system has values well beyond the tax subsidy. And that's what the dollar amounts in Casey's research says. That's what the public outcry taught us in 2007, 2008. People they're not just unable to change. If you look at Americans, they adapt to change dramatically. It takes time, but I mean, the world looks completely different than it did in the 1900s, certainly even from 2007, 2008. So it wasn't just they're stuck in the past. It wasn't just any of those things. It was, you are upsetting a thing we value. It has tremendous value to us, and probably would have formed organically without the accident, which is World War II. That's an important lesson. Right? We in other parts of public finance and public policy, we teach people to respect the choices private actors made. That reveals their value. We weren't doing that in this case, and I think that's the lesson from that episode. Jackson. So here and then Jackson.
Yes, good morning. Thank you. My name is Bill Christian. I work for Congressman Randy Weber. I appreciate your comments about the allure, the seductivity of collectivism and what have you, and that's my concern. For if the shift has gone from 70% ESI to 60% ESI, we're going in the wrong direction based on your premise. I'm not sure ESI is the best answer, but I'm persuaded by the discussion we're having today. So if we're going in the wrong direction there, which appears to be the case, what is the pithy political argument to push back against it effectively because collectivism is so alluring?
Who's going first? Go, Casey.
Well, my old boss was pretty good at pithy. And socialism is just a word he repeated, and he found it caught on, not just in Florida. There's a lot of people in the flyover country who do understand the problems. Maybe need a reminder now and then how badly it went, but once you remind them, they're like, yeah, there's a reason why I value self-sufficiency and things like that, because other places have tried it otherwise and it was miserable. And maybe my relatives came from there, a lot of people. I'm not a politician, that's why I looked to my boss who was pretty good at that stuff.
I'm not very pithy, but I would point out that, again, going back to that government is slow to change. It cannot keep up with the demands that individuals need. And in a changing medical landscape that we're in, I just don't think that the government can keep up. So if we want to stay in 1990s healthcare, which is kind of where the government is right now anyway, they're usually a decade behind what's happening, then that's what you get. And we're going to have, the American people are going to have an honest discussion if they're willing to take less, and less based on what the government tells them they can have versus the freedom to have what they think they need and what's available to them. I think there are a lot of good comparisons of looking at other countries. And you look at the UK, they're actually trending the opposite direction of where the America is. They're looking for giving people more options, freedom, let them come out of the NHS, things like that, where we're somehow going back in time, back to 1970s policy ideas. And I think it just doesn't match with what the demands, and I think in particular of the new generation coming in, you talk about workers, they're not, you're talking about people who have cell phones who want the latest cell phone the day it comes out and things like that. If they hear that there's a drug on the market and they have a condition and the government tells them no, for seniors that might be one question, but for a new generation of people, I think the demand is going to be very, very strong to still have some sort of a marketplace where you can have access to those things.
And then there's one in the back.
I'm Jackson. So
Stand
you talk.
up.
Stand up, really? Okay. Yeah. So a lot I hear from Doug all the time is that ESI is popular, and clearly the experience of the CAN campaign has heavily shaped that as it is popular, but how much of that is so is Nickelback? How much of this is it's popular because people really like it, or it's popular because people are genuinely afraid? And bit of a two-parter, if it's that popular, why do we need the tax exclusion other than taxation being theft? But that's another debate.
I'll deal with the Nickelback problem back at the office. You guys talk about the rest.
I think the exclusion's a fair thing to discuss, and it depends on the alternatives. You would have extra revenue, we got rid of that exclusion, so what are you going to do with it? If you're not going to give it back to the workers somehow, then you've just taken a huge bite out of the reward to work, and you may actually get less revenue from it. You'll be saving on these, Form 1040 might bring in a little more money, but the payroll tax is bringing in less money, sales tax is bringing in less money, so. But that's a discussion now to be had. We know how to have it. It's not dogma that says you can't look at that. It just, you want to look at all the major factors involved there, I think.
I think on the popularity too, I do think there's a sense of at least I have it, and I'm concerned that the alternative will give me less than what I have today. And I also think that there is a sense, we see this in Medicaid a lot when there were debates over the Medicaid expansion in the states. When it's framed as you're helping someone else, people tend to be for it. But if you're the one that's going to have to participate in it, then it becomes a different kind of question. So I think that there might be a trend of saying, yeah, we need to have, let's expand government options for people, let's put it up the income scale. That's fine, because in your mind you think that must be for someone who doesn't have what I have. And we should try to help those that we don't have the same. But I think that most people are at least happy with knowing what they know, not what they don't know.
Great.
Morning, my name is Jeremy Furchgott. I have a question just about some of the broader conservative intellectual themes that I think have parallels in this debate. 10 or 15 years ago, I think there was almost unanimous vision in the conservative movement for something like the gig economy, where people had control over their own hours, and they would kind of cobble together some combination of professional engagement. And there's been a shift towards a vision where large corporations, and I think for many conservatives, preferably industrial corporations, would support their workers, and that really should be the backbone of society. There are these two visions. Both of them have a strong home in the Conservative Party, but it seems like this conversation about ESI versus more individual models for healthcare is really part of this broader conversation in the conservative movement about how society what society should look like. Should we be a society of large companies and workers supported by their large companies, and more individual entrepreneurs or gig economy workers? So I'd love to get your reactions on that broader question.
Casey?
I mean, the big companies should compete with little companies, and vice versa, for workers, for customers. I think for us to sit here in Washington and say one is better than the other, it's arrogant, probably going to be wrong. And that's the beauty of competition, that people have choices between those. It's the same argument we have in socialism. A lot of socialists say, well, all workplaces should be democratic, right? Owned by the workers and stuff like that. You can have some of those and let workers decide whether they want to work at such a place. A lot of them don't, because such places aren't as productive, or they don't care to get involved with the politics, or whatever the reason may be. The workplaces we should have are the ones that are successful at attracting workers, and that workers really ultimately choose it one at a time.
I would just say that I think that this is labor policy, but much more diverse and complicated than just one or the other. I mean, I think that you have a whole ecosystem of large employers. You have to have small employers that that kind of feed into the large employers, whether they're making supplies or whatever, feed in, and then the gig economy for different kinds of reasons. So I think the diversity is, I think, to be welcomed, and I think that's where trying to put people into one size always kind of is not as efficient or as effective as people think it will be, because you always are going to find the one-off where it doesn't work in this system or it doesn't work in that system, which is why I think thinking of ways of recognizing that the ESI system is a great format for, obviously, in particular, large employers. I mean, 99%, some or almost 100% continue to offer health insurance. But what about further down, the river? How can we start thinking about what changes or reforms or improvements can we make to allow those employers to kind of still stay in the game and allow their workers to get some benefits from what's being offered to them?
Thank you. Yeah, don't want to take up all the questions, but seeing as there was a gap, would love to talk to y'all more as well. Casey, the question's for you. I know your work is focused more on labor. Could you comment on sort of the job lock argument, and specifically how that ESI interacts with entrepreneurship? I know you're familiar with it, but just for context, the argument is that that essentially, because you lose your employer-sponsored healthcare, if you leave your job, people are going to be less likely to go out and start new businesses. So it might be a great way for large companies to like retain employees, but it prevents entrepreneurship. So curious to hear your thoughts.
The kind of group activities that I've mentioned connected with health insurance or anything else, to the extent that those are valuable, that gives an advantage to the bigger groups. And the smaller groups need to compete with that. If you want to be small, that has advantages. You can be nimble and things like that. But you're going to give up on some of the advantage of being big. And one of those advantages is navigating the healthcare markets, both for the competitive reasons I mentioned, getting better deals and helping people understand. And as healthcare grows, that's going to kind of tilt. And healthcare growing is, again, it's a good thing that we're discovering ways to keep people alive longer and handle their conditions. As healthcare grows, that's going to tilt toward the bigger companies. And the small companies need to come up with something that they are doing better as well to compete with that. And if they can't, then I'm not sure nostalgia or something like that, but what that's all about. I mean, history has shown it's easy to see the advantages of big and hard to see the advantage of small. History has shown that the small guys have advantages and they go out there and they offer what they're good at and they don't offer what they're not good at. And small companies are still around today and probably will be.
So in the absence of another question, we like to run things on schedule, and so join me in thanking our panelists, and thank you.